What's up, everyone? Welcome back to another episode of the Sound Money Podcast. If you guys are brand new here, slap that subscribe button, whether you're watching it on YouTube or you're watching and listening on Anchor or Spotify or one of the platforms that this is going out on. Welcome to the show. And today we're going to be talking about unintended consequences. So this is a pretty big topic here, and unintended consequences are pretty much, in a nutshell, just it's in social sciences as a way of saying that the outcomes aren't intended. So, for example, what's going on right now at the time of recording this podcast is that the coronavirus pandemic happened and the economy got locked down. And I should say economies plural, but in this episode, I'm going to be, to keep things simple, I'm going to be referring to the United States. So the entire world pretty much got locked down. People were stuck inside, trying to stay safe. A lot of fear mongering going on because the incentives aren't necessarily aligned with media and things like that, where the more fear pumped out, the more views and the more money that gets made. So the incentives there are already misaligned, but that's another episode on its own. Today, we're talking about unintended consequences of a lot of things that have happened with a lockdown where people are not going to work. Now, at the time of filming this is June 1st in 2020, and we passed 40 million people in the last 90 days have applied for unemployment, which is a mind-blowing number. And for a lot of younger people watching this, including myself, I've never seen anything like this before. No one has that is alive currently, but specifically for younger people that did not witness 2008 and 2009 and the housing collapse that happened, there are a lot of unforeseen things that kind of bubble out of situations like this. And I wanted to address two specifically, two that people did not anticipate at all. Now, a big one that is kind of obvious when you lock things down is with the loans coming from the government to small businesses to support jobs, because a massive population of the United States are supported by small businesses. So this is called Main Street, and then there's, of course, Wall Street that are bigger publicly traded companies, but Main Street stands for small businesses, and that supports a substantial amount of the population. And when that Main Street gets impacted, you see massive job loss, which is what's going on right now with unemployment at 40 million people. And what we've seen is that the government stepped in and said, we're going to do these Paycheck Protection Program loans. We're going to be putting money into people's bank accounts via these small businesses. So the business gets a loan, and if 75% of that is deployed to payroll, continuing to keep these employees employed, then it's forgivable, which is just this really kind of scary buzzword. And there's a lot more information on that on the SBA.gov site. So the idea here is that it's kind of like by proxy, they're getting money into the hands of the people that are employed. So what happened was when that money started going out, it was a mad rush. They determined that they were going to do it and put it out as a law, signed it into law, and they didn't really figure out a good distribution plan. So it was signed into law, and then it was a Hunger Games style situation where everyone's running to the SBA.gov site, applying to get these loans and get their employees taken care of and paid, and while basically laying people off because they had to minimize the amount of overhead, especially for retail stores, a lot of hospitals, a lot of companies with heavy overhead had to just liquidate a ton of staff and things like that, which is very, very unfortunate. But it came down to the fact that everybody rushing in to these banks to get these loans from the government, and it was gridlock. I witnessed it. A lot of people that I know witnessed it and experienced it, and it created an exodus to smaller banks, to smaller local banks down on your corner, in your town, in your city, that are credit unions, things like that. And it created an off flow where bigger banks started seeing decrease in the amount of new accounts being created, and smaller banks were seeing a bigger increase in new accounts being created. So it was an off flow into a smaller bank where customer support and service is number one, and they were able to get a lot of these loans for people that could not get them through, like your Chase and things like that. And an example of this was, I actually called Chase, where I have a business account, and they straight up said they aren't doing any business lending until the end of the summer. And hearing that as a business owner, saying that all of business loans are frozen, like they're not going to be deploying any capital to businesses until the end of the summer, hearing that over the phone was very concerning. I never thought I would hear something like that, but no matter the business, no matter what your cash flow situation is, no matter the debt load your business has, you're just not able to get one through that bank. So that leads people to go to these smaller businesses. That was, the unintended consequence number one of this mad rush of the government putting this through without like a proper distribution plan, and just acting quickly, but at the same time, it just created a huge unforeseen consequence, and unintended, I believe. So some of this can be a positive outcome. Some of this can be a positive benefit to small businesses and those smaller banks that focus on customer support, and they needed an increase in accounts being opened. And that is pretty beneficial. It's proving that these bigger banks are just archaic, and they're not structured for things like this to happen, abrupt changes. So that was the big one. In my opinion, that's probably the biggest, where you lose trust in what's going on here between a bank and you as a business. So that was the biggest unforeseen or unintended consequence at first that happened. And the next one is from these stimulus checks. Now, the immediate knee-jerk reaction of everyone was, excellent. I'm getting unemployment and I'm getting the stimulus checks. So it's like $600 a week on top of my unemployment. That's $1,100 a month. This is more money than I'm making at my current job, is something I have heard a lot of. Now, this is a massive, massive consequence when you have people that are making more money by not working, not contributing into the local economy or the economy as a whole. That's a tectonic shift in a bad direction, where you have people that the incentive is not to work. You have people that are effectively just sitting and holding and saving. And we saw an increase in savings. I believe it shot past 7%, which is the highest in 30 or 40 years. And that level of unintended consequence there, where there's so much money being put into people's pockets from the government, that there isn't an incentive to work. There isn't that human want for progress, where everyone wants to feel fulfilled. And the majority of people out there, I would pose the question to say, instead of sitting on the couch all day long as a young person, I would wager to say the majority of people would want to put some work in and get some value back for doing that. Just basic human wanting to progress and show progress to yourself, feeling fulfilled, feeling that you're making some sort of impact. And I worry about this one more than I worry about the Paycheck Protection Program. This one, in my opinion, is something that could break human spirit. This one could be something that is even bigger of a groundswell underneath the problems that are happening on top. And this one is something that I never would have seen as a consequence, where when you immediately think of it, you think of not only are people afraid, so you're like, great, let's give them money, they're going to spend it. But the fact that it was a pandemic having to do with people's health meant that fear was going to be not spending. They weren't going to be buying anything. They were literally just going to be on apocalyptic lockdown within the confines of their home. And this has created a just huge unintended consequence. And I think it's something that we all need to work together to get past. We all need to help each other, help people that are going on unemployment, help them feel positive, help them get started with a blog, help them create content, help them start a business, help them do something, help them contribute to the consensus that is society. I really hope that these consequences that are starting to sprout up now aren't long lasting, but my knee-jerk reaction after studying economics for years, getting a degree in it, I feel that this is just the beginning of a ripple effect that could really dent the human spirit when it comes to feeling a sense of progress, helping contribute to the economy by paying people too much each month. And I know that a lot of people hear that and get angry, but just having a base is important. I agree. Setting a base for people, saying this is the baseline, $1,000 a month, let's say with UBI that I've covered a ton on this channel, Universal Basic Income. I agree with it completely, but adding too much Universal Basic Income effectively is making it so that people have lost that drive. And when you lose that drive, it's a slippery slope of that. And I believe in humans. It's a great species. I believe that we can persevere. Of course, we're tough. We have the ability to adapt and change our ways of working, change our ways of perceiving that you're making an impact. And I really hope that these unintended consequences of, locking up big banks with these this mad rush Hunger Games style deployment of small business capital. I hope that the unintended consequences of off-flow to these smaller banks is a positive one, and I hope that we can find a way to fix the concept of making more not working with these stimulus as well as unemployment checks as an unintended consequence. So that is it for my episode here. I really hope that it helped someone out there that's listening in on the podcast. I really hope that we are all positive about the future because we are going to get through it. It is a blip in the road here, but we are just getting started. That's very important to acknowledge, own that, and just know that there are probably going to be more unintended consequences that roll out. We're all human, and just be safe out there, and definitely do your best to invest your money, make sure that that money's going to work for you, and do your best to stay on track with covering your expenses by your assets. And that is it for this episode. Definitely slap a like if you guys like it, and I will see you guys on the next episode of the Sound Money Podcast.